Hello, and welcome to myfinanceteacher.org. Let's have a look again at our precious metals, and I'm going to start with the US dollar. What do we see on the US dollar? The ongoing short-term daily cycle on the US dollar is already 60 days old. Usually, if you look back to at least since late 2018, on average, the short-term daily cycles in US dollar lasted for a couple of months, for 59 days. Sometimes, of course, they are longer than that. The previous one was 50 days old. The ongoing one has already been going on for 60 days. And I think there is a chance for US dollar to maybe give us another poke below the Bollinger Bands over the next 1 or 2 days before short-term rally into the new short-term daily cycle starts. And even after that, I don't really think dollar is going to give us anything close to a higher high before going down into the declining phase of that new short-term daily cycle. So what that tells me is that over the short term, perhaps gold might actually be a little bit under pressure as dollar rallies perhaps over the next couple of weeks. But in the intermediate term as well as the long term, I am very positive on gold. Next, let's have a look at the rates. This is the 10-year bond rates, and we see that rates have started to decline all the way since late March. And they've recently broken below this 50-day moving average, and I think, again, just like with the US dollar, perhaps over the next few days, the rates might rally a little bit to retest this break below the 50-day moving average, to retest this downtrend line since late March, before continuing down. And some of the support zones for the rates are around 1.5%. That's a long-term support zone back from late 2019 low as well as early 2020 low. And if this support zone is broken, which I think is pretty likely that it will be broken, the next support zone is somewhere around 1.3%. That's from early 2020 high. So what this tells me is that, again, over the next perhaps 1 or 2 weeks, maybe again rising rates might pressure gold a little bit, but in the intermediate term I see rates going down, which also makes me positive on gold. Actually, it also makes me positive on bonds, and with the members at myfinanceteacher.org, over the last couple of weeks, we've already actually been profiting pretty well on an interesting bond ETF. So if you are interested in more details of our analysis, consider joining us at myfinanceteacher.org. The membership is only $10 per month. The first month is only half price, but sometime by summer I'm going to remove this first month 50% discount. So having discussed the possibilities for US dollar over the next few days and over the next few weeks, as well as the possibilities on the rates, let's move on to gold itself. As I mentioned in some of my recent videos, gold was likely to come up to this resistance zone somewhere between 1800 and 1850 before cooling down for a while, and that's what gold has actually done so far. Over the last few days, gold has dropped from this recent high at around 1800 down to yesterday's low at about 1770, but I think it's not really enough of a correction into the short-term daily cycle low. The short-term daily cycle is already 49 days old. Usually these cycles last for around a couple of months, so there is still time within this cycle, perhaps for a push higher into the upper range of this resistance before correcting down into the cycle low, or just continuing down from here. But in either case, I'm not convinced that this a little bit of a correction from 1800 down to 1770 was enough. I think gold should probably retest at least the recent resistance zone, which turned into support by now. We've discussed that level a few weeks ago, and that's anywhere between 1755 to 1760. So considering what dollar is doing and considering what's happening to the rates, perhaps some sort of a softness in gold over the next, say, 1 week before it continues higher into the new short-term daily cycle, as well as into the continuation of the ongoing new intermediate cycle. Of course, there is also a chance that gold corrects even lower. For example, if we look at Fibonacci retracement numbers from the recent low back in late March, as I mentioned, often 38, 50, or 62% are most common retracement levels. So if gold retraces, say, somewhere around 50% Fibonacci retracement, That implies it might actually drop to 1740 before bouncing into the new short-term daily cycle. Next, let's have a look at miners. GDX are doing pretty well. As I mentioned recently, they're showing a pattern of higher highs and higher lows, and I think they're in the process of possibly giving us a higher high relatively soon, maybe over the next 1 week. And the support zones for that new low is anywhere between 34.5, that's from the recent high in mid-March, and perhaps all the way down to this 50-day moving average at around 33.5. Another couple of things to notice on GDX is that it did came close to this 200-day moving average, and perhaps it's going to come off from that resistance of around 200-day moving average before attempting to break above that over the next few weeks. And the 14-day RSI did come relatively close to oversold over here at around 68 a few days ago. So a bit of a cool-off, I think, is going to be another chance to increase your positions in precious metals if you didn't do that earlier in March. And again, if you're interested on the analysis of precious metals and a range of other assets, consider joining us at myfinancesteacher.org. Lastly, let's have a look at silver, because it's kind of interesting. While gold has actually declined all the way since August, silver moved more or less horizontally since then. And while I think silver can come down a little bit, perhaps down to this 200-day moving average before continuing higher over the next few weeks, I think silver might actually be very interesting once it breaks above some of the recent resistance zones. That's somewhere around 28.2, and also above the recent high at around $30. Once silver breaks above those, I think there will be much more interest in precious metals, especially in silver, which might prove to be very beneficial to you if you are ready to load up perhaps while this correction lasts. And this correction might also generate something of an inverse head and shoulders over here on silver, with the bottom of this formation at around 23.8 and the neckline at about 26.6. That's around, let's say, around $3 height, and a measured move above that will bring silver close to the resistance zone at around $30. So that, I think, will be interesting to watch unfolding over the next few weeks. And while that happens, you are welcome to subscribe to the channel, hit the like button, and of course, consider joining us at myfinancesteacher.org. For now, I wish you a productive Monday and good luck in your trades.